channel, Day 22 class. Today we are going to discuss about subsidiary books. What is a subsidiary book? Separate books or special books are maintained to record a particular transaction is called subsidiary books. To maintain a special books. For example, if a small business has been enhanced, it became a very big business. So it is difficult to make pin-to-pin transactions. It's very difficult to enter all the transactions. A very big business maintain a large transactions, more transactions. So it is very difficult to make every transaction in a journal or ledger. It takes very time. So for that enhanced businesses, we are going to use a subsidiary books. In this books, we are making a separate books. We are making a separate books. Purchase, we are using a separate book for purchase. Sales, we are using a separate book for sales. In the same way, we are having 8 subsidiary books. Subsidiary books are classified into 8 categories. Let us discuss about the 8 categories of subsidiary books. Purchase book, sales book, purchase returns book, sales returns book, cash book, bills receivable book, bills payable book, journal proper. These are the 8 subsidiary books. This is our first subsidiary book, purchase book. Here in the subsidiary books, we are going to use the invoice number. Invoice number, right? In purchase book, only the purchase transactions. The purchase, only the credit purchase, not for the cash purchase. Only the credit purchase has written in the purchase book. Only credit purchase, only goods purchase. In accounting terminology, only the goods means it's a floating asset. The floating asset is called as goods. So only the floating assets and credit purchase has been mentioned in the purchase book. Cash purchase or mentioned in the cash book. So only credit purchase of goods only has to mention in the purchase book. Right? Let us do some example. So a missionary bought. We have purchased a missionary. What's the entry for the missionary account debtor to cash account? Right? Missionary account debtor to cash account. So there is no purchase account. Missionary is a fixed asset. So it does not mention in the purchase book. So here we are having a inward invoice. Inward invoice. That means we have purchased some goods. So then we have to write the inward invoice number in the purchase book. In the pro forma. This is our pro forma for purchase book. Date, particulars, LF number, inward invoice and amount. This is our purchase pro forma. This is our second subsidiary book, sales book. This is also as a purchase book only. In the sales book also we are going to write the only credit sales of goods, not the fixed assets. Only the credit sales of goods has to write in the sales book. So here in the sales book we are having outward invoice number. We are having outward invoice number. Right? This is our pro forma for the sales book. Date, particulars, LF number, outward invoice, amount. This is our pro forma for the sales book. This is our third book. purchase returns book. So this is also called as returns outward book. This is also called as returns outward book. So this book is used to record the entries of returns of the purchase. Purchase returns only. Mostly the purchase returns is held on credit purchase only. Credit purchase only. So obviously we are going to write the credit returns only. No, not the cash returns. So credit returns. This is returns outward book. This is also known as returns outward book. So here goods returned. When the goods return, the debit note has sent to the suppliers. The debit note is sent to the supplier along with the goods. Debit note sent to the suppliers along with the goods. So here this is our pro forma of purchase returns book. Date, particulars, LF number, debit note and amount. This is our fourth subsidiary book, sales returns book. This is also known as returns inwards book. Returns inwards book. So here in the sales returns book, when the seller received back the goods which has sold from the customer along with the debit note. When purchase, they will give some note, debit note on credit. So along with the debit note, the supplier will get the goods, will get back the goods from the consumer. So by taking the goods and the debit note, then the supplier has to write the credit note and send the goods along with the credit note to the consumer. Why we are using the debit note and credit note? We are using the debit note and credit note. Why? Because there is a transactions held. How much the amount have to pay? The debit note or credit note, both the buyer and seller has to accept. Both the seller and buyer has to accept both the debit note and credit note. Contains the details about the product. Contains the details, the price, quality, quantity, everything is mentioned in the debit note and credit note. If we have sold some goods, we have sold some goods to a consumer. If we have sold some goods to the consumer, if the goods is returned back, then we are having the credit note and the consumer will having the debit note. And our fifth subsidiary book is cash book. All the cash transactions in purchase book, sales returns, purchase returns, we have written the only credit transactions. Here we have to enter the cash transactions only. Here we are going to write the cash transactions only. So this subsidiary book is divided into four categories. First one is general cash book. First one is general cash book. All the receipts and payments. All the receipts and payments are entered into the general cash book. And second one is two-column cash book. Two-column cash book. If we are having any discounts, while the consumer will giving the full settlement, then we will give some discount. Right? So if any discount is there, then we have to use the two-column cash book. And next one is three-column cash book. If both the discount and check is also a cash transaction. That so check or discount, both petty cash book. Next one is petty cash book. If any petty expenses, in some situations we are using a petty expenses. A small expenses like stationery. So for that we will use the petty cash book. And next, sixth one is bills receivable and seventh one is bills payable. According to the Negotiable Instrument Act 1881 under section 5D, given document to the credit transaction. Instrument Act 1881 under section 5. So, for example, if he has taken goods for 1 lakh rupees on credit. So, we has taken the goods. The supplier given a goods. So, it is very risky factor for the supplier. We has taken goods and went away. Some risk for the supplier. So, for that we are going to use some sections. The supplier is in risk. For that the government has been passed a Negotiable Instrument Act 1881. In that we are having a pro note, promissory note, bill. According to the section 4, we are using promissory note. Section 5, we are using bill. Section 6, we are using check. The government has issued this type of safe things for the suppliers. Those who taken the debitor will write the pro note. The debitor will write the pro note. Those who take the credit, the creditor will write the bill. Promissory notes, pro notes are mainly used in the family affairs. So in the business, we are using the bills. Mostly we are using bills in the business section, business sector. These are the two types of bills. Right, in this, if sold some goods, if I will sold some products, so then I will write a bill, and that bill should be accepted by the supplier and the consumer also. Then that bill is become bills receivable for me because I sold the goods. So that is bills receivable for me, and that bill is bills payable for the consumer, and that bill is bills payable to the consumer because the consumer has to pay that bill now or any other time. And the eighth one is journal proper. Journal proper. The elements which are not enter into the above 7 subsidiary books. Not enter into the above 7 subsidiary books. That elements will enter into the journal proper. What are that? For example, rectification of errors, opening stock. So these type of entries or enter into the journal proper. This is the 8 categories of subsidiary books. I hope you like the videos. Please like, share and subscribe for more videos. Thank you.